Hello, I'm Charles Biederman, Seer. A seer is someone who accurately predicts the future of the financial markets, the overall economy, and a seer is someone who accurately predicts the future of the financial markets, the overall economy, and major societal trends. Now, I have a proven track record as founder and head of Trim Tabs Investment Research of calling major market tops in the early 1990s in Japan, the early 2000 NASDAQ meltdown, the 2007-2008 housing debt melt-up, and since 2013 through recently, I've been bullish as the Federal Reserve kept printing money, more money going into stocks. So the start of 2026 is a perfect time for a seer to predict what will be happening next. For example, the U.S. stock market keeps making all-time new highs as the excess COVID cash keeps flooding the investment markets. But the Federal Reserve this past year is no longer increasing its balance sheet. It's actually shrinking it a bit. Therefore, the new money flooding the markets is coming from individual investors. Now, investors believe the stocks can never go down for long. After all, since COVID, 2025 has been the third straight year that the stock market has made double-digit annual profits. Indeed, aggregate stock market prices, when compared to corporate profits, price-earning ratios, and balance sheet, are as comparatively high as they've ever been. CBS anchor Andrew Ross Sorkin wrote a new book, 1929, which demonstrates how the current stock market is very similar to the late 20s and 2000 bubbles. The last time individuals were so bullish via their investment activity was late 1999 and early 2000, when stocks like Amazon dropped by 90% from the top to the bottom. Now, what has been fueling the current surge in stock prices is a communal belief that artificial intelligence will create an economic boom based upon innovations in health, technology, business. All there ever is in the stock market is shares of stock and money flowing in and out of investor accounts. So when the COVID epidemic shut down the economy in 2020, the remedy was to flood the U.S. economy with cash. And yes, a significant amount of that cash went into investments. So much cash was available that money flows into cryptocurrencies such as Bitcoin drove all those prices ever higher. Add the technological breakthroughs that artificial intelligence brings to the table, and for some, the future is a blazing bright light. So that is why anything with AI has become a hot stock recently with unlimited potential, seemingly. The billions needed to build out AI infrastructure is so huge an amount that the future reality of AI will be much different from what is dreamed of now. While huge inflows have boomed stock, crypto, and gold prices since COVID, I have a real concern that there is not enough new money available to keep investment prices soaring at current rates, given that the Fed has stopped printing. So here is a few of my major concerns. Number one, the Fed is no longer creating new money, and the Fed's balance sheet is shrinking. Since stocks have gone up steadily, except for the COVID plunge, investors have been trained to believe that the overall market cannot go down. And therefore, whenever the market does, buying the dips is smart. Now, the current controversy about interest rates and who will run the Fed signifies that there is an underlying belief that the Fed will support stock prices if lower interest rates are required to keep investments from crashing. Other real problems that are significant for me are higher costs created by tariffs, which a tariff is nothing more than a tax on imports. Economic growth depends upon population gains. Reducing the supply of labor by immigration restrictions will slow economic growth. And then there's also the problem of global military interventions. If anyone were to ask, I would recommend selling some of your biggest price gainers, particularly the AI winners. Yes, stock prices can go even higher from here, but who knows? For now, I will keep watch and report on what I see. Thank you. How do I quit?
Hit the red button.